Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And a wonderful day it is to do some technical analysis and have a look at some candlestick patterns. I know how excited you get when I go into the candlestick patterns. So here it is. An amazing candlestick pattern which you very rarely get. Well, it developed in the last few days, so let's get straight into it. But before I do, the usual disclaimer, please remember everything in my videos is for educational purposes only. Nothing should be taken as financial advice. Please do your wider research before making any investment decisions. A quick wisdom bite quote that I've actually put down on my Twitter page, and that is that one of the greatest regrets in life is being what others would like you to be, rather than being yourself. And please remember, it's very important. What you think of yourself is much more important than what people think of you. So please always remember that. Don't live the life of what others want you to live. This is the mistake that I made, and I really wouldn't want others to make the same mistake. I might post another inspirational video later on today, so look out for that. And if you want to go onto my Twitter page, then look underneath any of my videos and you'll find the Twitter link there. Back to today. And this strange pattern that's been developing over the last few days, and it's called the Hikake pattern. Just go into Google and just go and look into it, because it's quite a complex pattern and I don't really want to spend much time explaining it here. It's not technically 100%, but it's nearly there, but it is playing out to that pattern. And that is that, so what we have here is an inside bar candle here, where the high and the low encapsulates the high and low of the following candle, which is this one here. I was actually waiting for a bullish harami candle here, but this pattern is far more powerful because it's really a pattern with 4 to 6 candles. And as I mentioned many times before, the more candles pattern there is, the stronger the pattern becomes. So what you've got is an inside bar candle followed by the third candle here, which technically should have the high and the low lower than the high and the low of the preceding candle here. What we have here is a higher high on this candle, but still have a lower low there. So I still think you should always have a bit of flexibility. So I'll accept that. The thing was that any of the 3 candles after this one needed to break the high of the first candle here, which was at 43,050. So the top of the wick here is 43,050. We'll put a ray there. Now this candle really needs to close on a daily candle, i.e. midnight UK time, above this line for this pattern to be confirmed. And it looks with a high degree of probability at the moment anyway, unless we have a big fall, which we can easily do with Bitcoin. So unless we have that, this should confirm this bullish pattern here. So this would tell me that we are more than likely, with a higher degree of probability now, going to hit this level here sometime in the next few days. And what that does is completes this head and shoulders pattern here, which I've been mentioning for many, many days now. And if we complete this, then it may well be that we spend many days hovering around here trying to see if we can break up. But what does happen with inverted head and shoulders patterns and head and shoulders patterns is that they don't normally break cleanly at the first go here. So I would expect some pullbacks along the way, maybe even to these levels here at 43, before we go up. So sometimes you get an extended shoulder, or the alternative view could be that we've had a 61.8 Fibonacci retracement bounce from this level to this level here. So if we do the retracement here, you'll see what I mean. To take it down to this bottom level here, and look at this, it's right on the 61.8 level over here. Let me take it to the left a little bit so you can see the figures. So the 61.8 is at 44,200, and that's currently exactly where we're at 44,200. So there is obviously a potential for this to come back and come back down to the 61.8 in this region here. So we'll have to see how things develop, but certainly very interesting developments going on. So just be aware of this. We need a close tonight, UK midnight time, of this candle close here. This is the inside bar candle here at 43,050 to confirm this Hikake pattern here, which is anywhere between a 4 and a 6 candle pattern, but we've got it on the 4th one, sometimes 3 candles after that you get this break up here. But certainly there's enough bullish pattern for it to push above it straight away. So on my swing trade, as I mentioned many times before, the prices I was looking for was either in this region here from the CME futures gap down here. We nearly just made it, actually. It was very close to the CME futures gap yesterday. Or the second price is above the 46,000 close here. So either way, I'd be very happy to take that, but we're right in the middle here. This is not where I like to trade, so I'm going to leave this until I get a confirmation of either this price at 46,000 or this price around here, around the 41,000. So we'll see what happens with that. I would personally be more happier to buy at the 46k level here rather than at this level here, because at this level here, 40, there is a very big danger that we could fall through down to the lower side. And then you don't know where it's going to go. Would it go to the 33,000 previous close, or will it go much lower to 28 or even lower than that? And I covered that in my video that I did regarding the concerns that I had for Bitcoin. Now, the reason why 46k is a much safer level is that once you get above this key level of 45, 46,000, there is much more clarity and there's much more higher confidence as well as a higher probability that if we closed above the 46k mark, then there is a much greater and clearer direction to go up towards the 52 mark. So we'll just have to wait and see what happens. Only time will tell, of course. So this was the futures gap here, which formed a few days ago, and the price came all the way down here, and there was just a little bit more to go before it would have covered that. But obviously we've had this Hikake pattern develop here. So just have to wait until how the price develops from now on. And if we have a look at the weekly chart, which I showed you yesterday, we had this bearish doji candle develop here. And the top of that wick is at 4,855. So if we got a close above that, that would be my trigger that this bearish candle is then invalidated, and then we're going to much higher levels towards the $52,000 mark. And the bottom of that wick is at 41,678, and a break of that would mean that we're going to go to much further lower levels, even below the 40k level. So very important candle, this one here. And as I've mentioned many times in the past, this kind of a candle at the top of a trend has a between 70 to 80% probability to break to the downside. So while we're getting an upside lift here, as you know, Bitcoin can quite easily turn around, and trading in the middle of these two resistances is very dangerous ground. So these are the levels to really look out for. There's only just a couple of those developments, the Hikake pattern and this doji candle. They're the ones I'm really focusing on for the next few days, and see how these develop, and I'll actually keep updating them in the next few videos. So that's it for today, a short and sweet little video. I hope you found value in that, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.